Welcome to the Lone Ranger Radio Show. My name is Bruce Woodburn, CrossCountry Mortgage, and yes, I am the Lone Ranger. They call me that because it's pretty much all I know how to do is arrange mortgages and help people out to be able to buy their home, sell their home, refinance their home, pull equity out, do renovations. Maybe you're looking to consolidate some debt. So in this program, whether you're looking to buy, sell, or refinance, you still might find some fascinating information. Let's face it, our real estate is our greatest asset, and we need that real estate to grow. When we're purchasing real estate, we always want to look at what does that look like in terms of an investment. So what homes should we be looking to buy? What type of properties may be a little bit more risky right now, like maybe condominiums? We're going to talk a little bit about condos in this show today and the challenges that we can face when it comes to condominiums. Even though it's a lifestyle that people want, we're going to talk a little bit about the challenges that they have. We're going to talk a little bit in this show about first-time home buyers. So if you know somebody that's currently renting, we want to make sure that they have all the right information so that they can get out of renting and into home ownership. Listen, renting is a dead-end street. It doesn't get you anywhere. There's no such thing as a rich renter. There isn't any. There's none. Maybe Elon Musk. He's the only one. Okay. But for the rest of us, you look at buying real estate, it's the way to invest. So we're going to talk about a little bit about that. What type of down payment assistance programs are out there? We got Hometown Heroes and other local programs that might be of interest to you. We also have other opportunities for down payment assistance. We're going to discuss that. Oh, here's some other things I want to talk about today. I get a lot of phone calls for people that call me about a home equity line of credit, and they're comparing a home equity line of credit to a refinance because most lenders are going to try to convince you to do a refinance. Is it the right thing to do? Should you refinance and get rid of that 3.25% interest rate you have only to take on a 6.9 or a 7.5% interest rate? Is there a reason that's better to do that? We're going to talk about the pros and the cons in this show. And then where are the deals right now? Who's got the deals? Well, I can tell you right now, there are motivated sellers out there right now, and we're going to discuss that. And there's motivated builders. And then last but not least, I want to talk about the health of the market, because that's the elephant in the room, isn't it? Everybody's concerned about interest rates. Everybody's concerned about inflation. We all are. It hits us hard, and everybody is dealing with it right now. But I'm going to tell you something. We voted the moron in there that's in there right now, and it's not going to make it better if he stays in there. So I believe that a lot of these issues have to do with our government and the direction they want to take this country in. And I don't think that they've got the best interest of our economy. And that's my opinion on that. So we got to get rid of the buffoon that's in the presidential suite right now and get somebody else in there. Hopefully that's Trump. That would be my choice. I voted for him before. He won once. He lost the second time. So we got a choice. We either do demented with dementia, which I'm not saying anything bad about dementia, but we have a president that has it, and that's a problem, okay? Or we have a little bit crazy. So which one are you going to take? An idiot? Or are we going to take somebody that's a little crazy? I'm choosing crazy. Matter of fact, I'm choosing crazy strong right now because what we have just isn't working. And when I see these tweets and things about, oh, this president's got the strongest economy ever, that is the biggest crock I've ever heard of. And you and I both know it. And unfortunately, that the Democrats, the liberals in our society tend to attract the lower income families because they promise them, we're going to pay off your student loans and we're going to give you higher wages. And, those are the kind of things that attract them, which you're going to be attracted toward that if you're low income. It's natural. But the fact of the matter is it's a ruse. Have they ever fixed the problem? In all the years they've been in office, have they ever fixed the problem? Or do we always have worse economy when we have a liberal in the office? Let me ask you a question. Are you doing better today than you were when Trump was in office? I don't think so. Everything's more expensive. Your gas is twice as much. Your food is twice as much. You're not making any more money. So you tell me the economy's strong? I don't think so. I don't think it's strong. And I think that's the elephant in the room for my industry as well, because you got higher interest rates and it keeps people out of the market. But we're going to talk about how to make the market work for you, because there's always opportunities no matter what the market does. If it's great, there's opportunities. If it's bad, there's opportunities. You just have to know how to look for them. My name is Bruce Woodburn. I'm the loan arranger. You can reach me right now in Tampa at 813-213-4009, 813-213-4009, or webringyouhome.com. That's webringyouhome.com. So call, text, me, or call me in Orlando at 407-706-3313, 407-706-3313, or webringyouhome.com. All right, let's get right to the show, folks, so we can have a little fun. You can learn some things. If you're wanting to become a real estate owner and you see the opportunity to make money in real estate over the long haul, this is a get rich slow. I am teaching my Leapfrog wealth building how to purchase multiple properties over a lifetime that are not for fix and flip. These are buy and hold. If you want to know how I did it and how you can do it and save a lot of headaches, I'll show you the type of properties that I look for, how to negotiate the properties, how to build a portfolio of real estate, how to retire with generational wealth. Now, listen, you should pay me $2,500 for this class. I'm just telling you right now, it would be worth it for you to pay me $2,500 to come to this class. However, I'm doing this class as a discount because I want to help people. And that's the God's honest truth. So what do I charge? I charge $15 a head to get in and $25 per couple. You must register in advance at webringyouhome.com. I will be letting you know where the next location is. So I'm actually going to be doing it somewhere in the Orlando area. I haven't quite decided yet, but that's going to be on June the 26th. So I have enough time. Register now. It'll be in the Orlando, Maitland, Winter Park area, somewhere around here, and we'll get you guys in on this class for $15 a head or $25 per couple. You won't want to miss this. I'm going to eliminate all of the unknown, and we're going to get down to business on that. webringyouhome.com. Register for Leapfrog event. All right. Next on the agenda are condominiums. And I think if you own a condo or you're considering buying a condo, you won't want to turn the channel right now. Believe me, you won't. So condos are going through a lot of challenges right now. One of them, just because of all the structural integrity new guidelines that have come into place since the collapse of the Miami condo that lost, I think, 97 lives in that. So condominiums are required to have new structural reports, and some of them are willing to do it. Some of them aren't willing to do it. Some of them don't have the budget to do it. So that's causing undue stress, and it's putting some significant strain on the homeowners because they have to cough up money to get these things done, which is going to increase HOA fees, some special assessments they may incur. So there's a lot of things, and that doesn't even include the mitigation of the problems if there's a problem involved. Then you got these roof claims. So everybody wants to get on the free bandwagon and get a free roof, including you. I know you did too. All right. You want to get on the free bandwagon. So you're going to call your insurance company and tell them that you had hail damage or whatever the case may be. And then you're going to get a free roof. But then you're going to get canceled for your insurance. And then you won't be able to find anybody to do it later on. So it's a double-edged sword. You get the free roof and get canceled and end up paying 3 times more for your insurance down the road, or do you go ahead and suck it up and take the free roof and deal with the consequences later? Well, condominiums are doing this as well, right? So here's the problem. If you make a claim to your insurance company and your insurance company says, hey, that's not a legit claim, that's wear and tear, we're denying it. Well, now you've notified them that you need a new roof, but you don't have the money to pay for it. What do you got to do then? Now you got homeowners coming in there, and now you got to put this new roof on because you made a claim for it. And now your special assessments go back up again. So condominiums are dealing with a lot of these issues. So then tax has gone up. Homeowners insurance for the HOA has doubled, if not tripled. So now all this gets passed on to you. Now that's all tough stuff you got to deal with. So if you're looking at condos or you have one, you're up for some serious challenges. And I'm not willing to jump in that game right now because I don't think it's settled enough. And here's what happens. You don't know this, but I'm going to share it with you. When you wish to purchase a condominium and you want traditional financing, VA, FHA, conventional financing, that condominium complex has to be approved by Fannie Mae, HUD for FHA, or VA for VA. If it's not approved, you can't get one of those loans on it. You have to get non-traditional loans, which means more expensive, higher down payment. So you wouldn't be able to put down 3.5% and get an FHA loan because it wouldn't qualify. And what's happened is a lot of these condominium complex that were approved on the FHA, VA, and conventional list have now not meet the reserve requirements to stay on that list, and they're all falling off. So now let's just say you want to buy a condo. Well, you can't get regular financing on it. Let's say you own a condo and you want to sell it. Well, now it used to be worth $300,000. Now it's only worth $200,000 because you're only going to attract a cash buyer or somebody that's willing to get alternative financing if they can even get it. And that's the problem with condominiums in today's day and age. I get the idea that it's a lifestyle, that low maintenance, you want a swimming pool and a gym and a clubhouse and all the great things that come with the condominium living. But real estate is an investment. And if you don't treat it that way, it will bite you in the butt. So don't do it. 407-706-3313. I am the loan arranger, Bruce Woodburn, CrossCountry Mortgage, 35 years doing mortgages and helping people create wealth in real estate. That's really what I like. At this stage of my career, it's helping you create wealth in real estate, but you have to listen to me. Okay. You can't just go about it on your own. You have to listen to the loan arranger. He'll guide you in the right direction. I talk to me in the third person, apparently. I don't know why I did that, but I did. So you want to listen to me? I'll help you get there faster. You want to do it on your own? You can get there. It'll just be slower and more expensive. So you can make that choice. Call me in Tampa, 813-213-4009, 813-213-4009, or WeBringYouHome.com. Get your application started. Purchase, refinance, cash out, debt consolidation, home equity line of credit, you name it, I got it. Construction, renovation loans, reverse mortgages, whatever you need, I got it. Go to WeBringYouHome.com. Get your application started. Then we'll have a consultation. Hey, why are people so worried about having a hard credit pull? Okay. That's because you think it's going to affect your credit negatively. If you shopped for a car, it would. If you're getting a mortgage, it hits you for 3 points. Okay. But I'm going to save you the headache. All new applications, soft credit pull only. I won't have any ding on your credit. Not until you're ready to go in front of an underwriter to fully approve your loan will we do the hard credit pull. If you are applying for an FHA loan, it's hard for me to run numbers on a soft pull. So in some cases for FHA, we insist that you go ahead and authorize a hard pull. But for most of you, you don't need it. Don't even need it. All right. So the loan arranger right now, WeBringYouHome.com or 407-706-3313. Tampa, 813-213-4009. When we get back, I want to talk about down payment assistance programs, what they have to offer, what's available, which are the good ones and not so good ones. I want to talk about home equity line of credit versus refinance transactions. So we'll be back in 5 minutes with more of the Loan Arranger radio show. Bruce Woodburn, CrossCountry Mortgage. Don't go anywhere. We're also going to talk about the health of the market. You won't want to miss it. I'll be right back.